The BSE SME IPO index is continuously hitting new highs. On Monday, the 6th of May 2024, the BSE SME IPO index reached a historic high of 74,707 points. In April 2024, that is last month, the index gave a stellar return of 31.5%. In terms of the surge in the SME IPO index, April was the best month since December 2021. In December 2021, the SME IPO index had jumped by around 60%. Moreover, in the last 1 year, the SME IPO index has recorded a return of nearly 3 times. So what is the reason behind the ongoing rapid surge in the SME IPO index? What strategy should be adopted in this sector now? How should good SME stocks be selected? Let's understand. First, let's know what is the reason behind the surge in the SME IPO index. Despite concerns expressed by SEBI chairperson Madhvi Puri Butch regarding the valuations of SME IPOs and price manipulations in some stocks, the surge in this index continues. In the last 6 months, this index has gained around 75% and in 5 years, it has given returns of 43 times. There are 3 to 4 major reasons behind this tremendous surge. The first reason is the strong listings and stock performance in the segment recently. According to a report by Trendline, in April, KP Green Engineering, Bondada Engineering, Harshdeep Hortico and Deepak Chemtex gave returns of more than 50%. KP Green Engineering stock has doubled in a month. The second reason is the increasing interest of large and institutional investors in SME sector stocks amid the ongoing economic uncertainty globally. Shares of these sectors are being seen as safe and strategic option for portfolio diversification. Compared to big names, these stocks are considered to provide more stability to the portfolio and have higher growth potential. The third reason is the increasing confidence in the growth of the Indian economy. And the fourth reason is that in the last few years, the Indian market has become investor-friendly for SME IPOs. The government has made the process of raising capital easier. Measures have been initiated for investor protection. And most importantly, there is a conducive environment for businesses to launch IPOs. The surge in SME sector IPOs and the increasing confidence can be gauged from the amount raised by companies in this sector through IPOs. In the first 3 months of 2024, that is between January and March, SME companies have raised around 2,012 crore rupees. Prior to this, 4,686 crore rupees were raised in 2023, which is 2.5 times more than 2022. This is the highest amount raised in a year since the launch of SME platform in 2012. Every week, 5 to 7 SME IPOs come. Apart from 2 to 3 IPOs in a month, all the rest give 2, 3 or even 4 times the return on the day of listing or within 15 days. This is why the index is rising. After the recent surge, what strategy should be adopted for stocks associated with SME IPOs? Let's understand. Experts believe that the bullish phase in the SME sector is likely to continue as many new companies are set to tap the IPO market in the coming quarters. Compared to main board IPOs, the rules are not as stringent for companies listed on the NSE's Emerge and BSE's SME platforms. SME companies have been exempted from regulations like minimum issue size, disclosure requirements, etc. But this does not mean that investors should invest blindly in any and every company. There are some experts who believe that caution should be exercised while selecting stocks in the SME sector. But the question is, how should good SME stocks be selected? Despite challenges like lack of information, low liquidity, and high volatility, experts believe that while selecting these companies with a market cap of less than 500 crore rupees, 5 factors should be mainly considered. Investors should choose SME stocks that have strong fundamentals, a unique and growth-oriented business model, good financial performance along with a strong balance sheet and robust corporate governance, that is, companies that do not have any ongoing litigation against them and no allegations of manipulation against the management. Overall, the SME sector, which has the potential to become a multi-bagger, carries as much risk as its ability to deliver returns. In such a scenario, investors need to be disciplined and systematic in order to identify and buy these companies before they become established and large firms. If there are any doubts or if one cannot do their research, there is no harm in seeking advice from an investment advisor. This is because for SME company IPOs, the minimum investment amount is 1 lakh rupees compared to 15,000 for a lot in main board companies.
Now, you too can ask any question related to personal finance on the Money9 app. Do you have a query on stocks, mutual funds or tax? Now, you can directly ask our experts. Connect with them anywhere, anytime. Ask your questions in Hindi, English, Marathi, Bangla, Gujarati, Telugu and Kannada only on Money9.